Good evening, students. Today we are going to discuss one of the important chapters of your CPT, that is concepts and conventions. If you look at the scanner, you will come to know that this chapter carries a weightage of 5 to 12 marks in your examination. After this, a question may arise in your mind that why this chapter has a weightage of 5 to 12 marks even though this chapter is of 5 to 10 pages. And even one more question will arise into your mind, or I ask my student to ask this question every time when they start new chapter, that is why I have to study this chapter. The reason for both is this is a chapter which acts as a basic for all your next chapters, and the accountancy is fully based on these concepts and conventions. It can't go beyond these concepts and conventions, because when you want to understand something or when you want to study something, you want to know what you should know what are the principles on which it is based, and those principles are nothing but the concepts and conventions. If I want to describe the concepts and conventions, concepts are the rules framed by the expert bodies, and conventions are the practices made by the expert accountants. So together in Hindi we call it as read and revise. The same thing it means in English it has concepts and conventions. Now, while discussing, many books, if you refer all the CPT books which are with you, some say that there are only 12 concepts, some say that there are 10 concepts, 4 conventions, some books merge both together as only concepts. But in detail, if you want to study, then there are totally 10 concepts and 4 conventions. 10 concepts and 4 conventions. Now we will see one by one what all are those 10 concepts and what messages they give to us, or what the learnings we get from those 10 concepts, and the 4 conventions and the lesson learnt by those conventions. Out of that, the first concept is business entity concept. Business entity concept. Now before that, one thing I want to tell you that if I imagine that I'm sitting in my business, or it may be shop, or it may be hotel, whatever it may be. Now my son or my brother has came to me and asked for his tuition fees. Now I given him the tuition fees of rupees 10,000 from my own pocket. Now the question comes whether that should be recorded in the books, because we have to separate. If I record, then I will never come to know what is my business profit, because it is a personal transaction. I'm recording it in business, right? Naturally we don't record it, because the reason is given by this concept, or the concept which supports this idea is business entity concept. It says that the business is separate from its owner. You can't treat business and the owner as one. The reason is to differentiate between the business transactions and personal transactions. If you merge them, then you will never come to know what is the true profit or loss made by the business, because the ultimate intention of our preparing of accounts is to know the profits and loss of the business, which you cannot know if you merge the business and personal transactions. And we treat capital as liability according to this concept only, because when we treat owner and the business as two separate things, when owner puts money into the business, then it becomes duty of the business to return that money back to the owner, because here we are treating business and owner as two different aspects. Okay, so now next, second concept, which is money measurement concept. The money measurement concept says that the transactions which are in monetary form, the transactions which are in monetary form should only be recorded in books of accounts, because there are many events or transactions which are related with the business. For example, if one of our director of our company is ill, it is related to business. He is a person who is related to business, and he is ill, that is also related to related, but we can't record that in business. Or if some person comes to you and say that I have bought some goods from you for so and some money, you record it. That is a transaction, valid transaction, but there is no measurement. He is saying that some goods for some money or few goods for some money which cannot be measured. So we can't record in books of accounts. So it is as per money measurement concept. And it says one more thing, that the the currency which you should apply while accounting is the currency of the country for which you are preparing the accounts. That you have to keep in mind. Stop.